Hello, and welcome to another episode of the US Market Open. My name is Rufas Kamau, and I'm going to be taking you through this session. So, remember, we do this on each and every Tuesday from 4 p.m. We focus on the US assets, that is the US dollar currency pair. We also look at oil and gold markets. And also we look at the US market, we mainly on the current events happening around the world. And once we understand what's happening around the world, then we will be able to narrow down to opportunities. Welcome, Protas. Welcome to the session. If you have any questions arising from the presentation, then feel free to raise those questions in the Q&A section, and I'll be responding to those questions right away. All right, so let's start with the most recent news of the day. So earlier this morning, we had news from the Reserve Bank of Australia, where they decided to raise interest rates by 50 basis points, reaching an overall rate of 1.85%. So investors had already banked on this information. So for the entire last week, we had seen the Australian dollar strengthening against the US dollar and other currency pairs. And in this case, after the announcement of the news earlier this morning, we saw the Australian dollar weakening against the US dollar. And this has continued as the main theme for the day. So you can see the general performance of the asset here, right from the early morning. So right from midnight, we saw the Australian dollar starting to weaken against the US dollar. And then eventually after the news, a very, very sharp drop on the very first hour, second, third, fourth, and fifth year, where the Australian dollar was just weakening against the US dollar. So there was a very nice pattern that we were following over a period of time, where the market was just oscillating between the two trend lines, moving from this side, the lower side, upside downward, upside downward. You can almost get and predict the cycles that had been happening. However, since this morning, we had a change of pattern where the market convincingly broke the lower trend line. So the second hour continued pushing down before putting back up to retest the area. And now it seems like as we head into the New York session, we might be seeing a much weaker Australian dollar, considering that today we're also seeing a very strong dollar in the market. And this leads us to the next part of today's presentation. Sorry for this. The dollar happened to be very, very strong this morning. And we have seen the same thing happen over and over across other currency pairs and also in the US dollar index. So beginning with the most popular currency pair, that is the Euro USD, since morning, we have seen some very strong movement towards the lower side, basically indicating that the dollar is strengthening against the euro. So from the forward chart, you can see that there was a very strong resistance level along the upper trend line. So this is a theme that you've been seeing for quite a period of time, where despite the Euro USD being on a bearish trend, and we can zoom this out, let's say back to the daily chart, and you can see that the consistent drop has been happening the entire year. So throughout the year, this has been quite a consistent theme, where the euro has been weakening against the US dollar. So this has been the overall performance of the euro against the US dollar since the beginning of the year. So focusing on a shorter time frame, that is the forward chart, you can notice the most recent swing here, not the most recent. This was the swing in May, where we had a very strong resistance here, and the euro kept weakening against the dollar. And then another swing, we saw another high here. This happened in June, earlier this year. And then the market accelerated all the way down, breaking the variable That is a level where the euro was trading 1-to-1 to the US dollar. The euro strengthened back, kept going up. So for half a week, and then 2 consecutive weeks, the euro was just gaining. And then this week, since this morning, you'll notice that after hitting the resistance, we have seen 3 consecutive candlesticks towards the lower side. These candlesticks are bearish in nature. So if I want to change the properties here to make it clearer. So 3 consecutive candlesticks where the euro is now losing against the US dollar is a very strong indication of a strong entry by sellers. And we might see the original theme continue, pushing the euro lower against the US dollar. So remember, the underlying fundamentals are very simple. The US is the most aggressive currency against, the US dollar is the most aggressive currency compared to other currencies when it comes to interest rate hikes. So we have seen a series of interest rate hikes happening in the US, with the most recent ones being 75 basis points each in the last 2 months. So with this aggressive tightening, we have seen a much stronger dollar compared to other currencies, and this might continue being a thing in this quarter as we head into the 4th quarter of the year. So a very strong resistance level indicating a strong rejection, and there is that potential that we might see the market continue pushing down. So before I progress further in the presentation, I'd like to mention that this is purely educational, it's not investment advice, and if you decide to trade, then risk management must be practiced at all times. So this is a purely informative for information purposes. It's not investment advice, and also it's not a recommendation to trade in a particular asset. So that being said, notice the Euro USD and how it's weakening since morning against the US dollar. And now we move on to the next asset, and in this case, we've got the pound. So the pound has also been gaining in terms of aggressiveness against other currencies. So clearly, you can see the strength of the pound here against the US dollar. So this has been following quite an interesting path, where for a couple of weeks, the pound was just weakening and weakening against the dollar. And now this seems to have changed a couple of weeks ago, where we now started seeing the pound strengthening against the dollar. So this has continued being a theme for like 3 weeks now. And now, since this morning, where we had the US dollar strengthening against the pound, it was a common theme across board, but this did not happen to cut all the way down to the support. So remember, the original trading idea is to wait for the market to go all the way down to the lower trend line, so that you can, let's say, look for a bullish position in the direction of the trend. So this is not how this is playing out. So since this morning, when the dollar was strengthening against the pound, investors were very early to buy into this pullback. And since somewhere around midday, we have seen a much stronger pound against the dollar. And it seems like a reversal of the early morning move. So this is our early morning move. And now it seems like the market is changing direction and might be headed a bit higher. So this seems like the prevailing theme in the pound USD currency pair. So looking at other currency pairs, one of the most interesting charts is the USD JPY currency pair. So we know that the yen has been extremely weak against the US dollar, and this has been a common theme throughout the second and third quarter of this year, where the dollar has just been gaining against the yen. However, since mid last month, we saw the yen starting to strengthen against the dollar. So this kept going down, and then since the beginning of this month, and I'm talking about the yesterday, today being the second day of the month, we have seen the Japanese yen continue to strengthen against the US dollar. So from a smaller time frame on the 1 hour chart, I'm seeing some form of consolidation here. So if the dollar happens to be strengthening, we could be seeing the market change direction. So it's a matter of looking for the right kind of position. So we know this. A very, very sharp drop here. So if we see any signs of bullish entry, then this might be a sign to start looking for a continuation move. So remember, the fundamentals are still the same. So the Japan Central Bank, or the Bank of Japan, is still maintaining low interest rates. Yield curve control efforts are still being maintained. It's just accumulating more and more of Japanese government bonds. And this kind of pattern in monetary policy may imply a much weaker Japanese yen as we head towards the fourth quarter of the year. So as long as we are seeing the US dollar weakening against the Japanese yen, at some point, I'm expecting the US dollar to start strengthening against the yen, and we could start seeing the prices push towards the upper side. So this is a much welcome breather, a much welcome kind of pullback. So if this happens to be the bottom, then we'll be looking for signs to enter into a bullish position towards the upper side. So the most recent swing here is very interesting, mainly because at some point it was acting as a resistance. So you can see the swings here. So I'm talking about this swing where the market was unable to break here, and also these are the swing. So sometimes these historical price levels can have an influence on the present price levels. So once acting as resistance, maybe they could be significant enough to imply that we have hit a bottom and now start seeing prices moving in the opposite direction. So it's the only outlier right now where we are seeing in US dollar, the dollar has been gaining against the euro. Sorry, in the euro USD, the dollar has been gaining. In USD Swiss franc, the dollar is also gaining against the Swiss franc. In the pound USD, the dollar was also gaining. So in the yen, this was the only exemption in this case, where the dollar kept losing against the yen. So maybe we could be seeing something happening around this price level. And this is 131.051, that's the current price level, with the lowest price level hit today being somewhere around 130.384. So a very interesting price level. Start looking for opportunities in the opposite direction. So going forward through the week, we're expecting more news to be happening. So one of the news that we'll be expecting is the job openings. So a very interesting data point. I believe this should be happening at 5 p.m. So just a quick check. Straight. So the job openings data will be released at 5 p.m. later in the day. That's about 40 minutes from now. So in the previous reading, that's last month, we had 11.25 million job openings in the US, and now we're expecting this to drop to 10.99 million. So if we have a surprise in this data, that is, if there's a big divergence between the expectation and the actual outcome of the data, then it could cause some volatility in the market. Remember, everyone, majority of the investors in the market are trying to establish how strong or resilient the US economy is, or how weak it actually is. So if the jobs data indicates a much weaker economy, then we might see a lot of action happening in the markets, especially towards safe haven assets or inflation-proof assets. But then if the jobs data indicates a much stronger job market, then we might see some continuation with the normal prevailing trends. So a very interesting data point. The other issue is about oil. We're expecting a lot of volatility in oil tomorrow. Remember, we'll be having a meeting of the OPEC countries. So if they decide to, let's say, increase output, then we'll be seeing lower oil prices. And if they decide to keep slowing down in terms of expanding the oil output, then the focus will be mainly on demand. So on the demand side, we're looking at the economic production, manufacturing data, especially in China and India. So if there's expansion in manufacturing, then perhaps higher demand for oil, and investors may be betting in oil based on this. So we'll be looking at both the demand and the supply side, with the OPEC determining the supply, and then the demand side being determined by economic activity. So a very interesting period to be trading US oil, especially considering that now, for the last 4 weeks, it's indicating a very strong bear market. So you can see since May earlier this year, we have had some very strong swings in oil. Some of these swings are lasting weeks. So this one was taking about 2 weeks. Market goes back up the following week and then back down, up, down, up, down. But now the most recent movement is very interesting because it seems more or less like a sideways momentum. So in this case, see from this point to this point and then this other point, it's a little bit different. So try and change this to color blue and make it a little bit stronger. So we have these forming as our resistance now. And on this other hand, we are seeing this as our support, which basically implies some sideways momentum in the last 3 weeks. So from this point going this way, this is what we are experiencing here. So for US oil, doesn't seem at all bearish for now. So it seems like demand is picking up and we could be seeing price now starts moving towards the upper side. So key thing to notice is that from the progression in the last couple of weeks, the market was continuously forming lower and lower highs. So if you compare, let's say, this high that we saw here, then you compare with this other swings high, then you keep on comparing these swings high, you notice that they are getting lower and lower over time. But now, if you compare the lows in the market, it seems to be forming some different pattern. So we have this low here, compare with this other one, compare with this other one. And if you keep comparing going downwards, then you notice that things are pretty getting stronger. So the most recent swings here are very interesting. This is getting better. And also this is getting better, indicating that we could be seeing demand picking up forward. So if the market is unable to form lower lows, then at some point we would be seeing a change in the direction of the trend. And perhaps going through towards the NFP, then we might be seeing the US oil starting to strengthen from this bottom. So a very interesting price level. So this could be a play going forward. So I'm not sure whether this will play out. I'm just speculating on this. So if this happens to be a bottom following the previous lows and the strong rejection here, remember these tails can be very important, indicating a strong rejection of lower prices. Then this bounce could be a very nice theme towards the upper side. So if you are a US oil trader, then this is something you might want to think around if it actually plays out as the bottom or if the market remains within the pattern. That is the pattern between the two blue lines. So if the two trend lines here happen to be the determinants of the next couple of cycles for oil, maybe an oscillation up and down and up and down, or even a straight out break towards the upper side, it's something that I think it's worth considering. So if you have any questions arising from the presentation, feel free to write those questions in the live chat, and I'll be looking to respond to those questions later. So there is a comment here that audio is not clear. Can you confirm if it's clear now? This is a comment from TNO. So I hope the sound is clear now. So can you confirm? Oh, awesome, awesome. I have a response from Dennis. Yes, it's now clear. Thank you very much, Dennis. Let's proceed. So we keep on moving, check on the next asset. So gold, one of the most interesting assets in the market right now is gold, since it has been extremely bullish over the last 2 weeks. But then before that, we had a series or even a sequence of weeks where gold was extremely bearish, kept going down until it hit a major support of somewhere around 1680. So since then, a very strong acceleration, and now it seems like we are approaching a major resistance level, and that's somewhere around 1790. So once we get to that level, there's a chance we will be seeing a breather in the price of gold. So having been in a bearish trend, and this bearish trend started all the way back somewhere around February this year. So for the entire year, gold has been weakening. So this is weird. It's not normal to see gold going down when the equity market are also going down. So if you look at the trend that has been happening in the S&P 500, the Nasdaq, and the Dow Jones since the beginning of the year, they have all been bearish. So whenever equities are strongly going down, then in previous cycles, we have seen gold strengthen during those periods. So for now, we are seeing a much weaker gold. So from this point, making swings towards the lower side, forming a topping pattern in April. another bottoming pattern in May, a topping pattern in June, and then all the way down in July before hitting the support, and then bouncing all the way up. So this acceleration is very interesting. Seems the market is keeping going up and up. Then price level around this area might be very interesting because we could be seeing the price testing two levels apart almost the same time. So one of them is this bottom here, the bottom of May. So the lowest price that we saw in May is being tested right now. And now there's also the upper trend line here. So if gold breaks, let's say 1785, then we may start looking for weaknesses in the trend. And if we see some form of rejection of higher prices, then it would be a signal to start looking for short selling positions. So remember, it's not always guaranteed that the market will, let's say, get to this point and start going down. Sometimes it's a straight up break and a change of trend. So it's also important to check whether the market happens to break this trend line. So a very interesting area to check on gold. So the price level is somewhere around here, around 1795. Sometimes the round number can be very interesting. So also 1800 is a key price level to observe. So between 1785 and 1800 will be very interesting, checking whether there's a signs of reversal or signs of acceleration towards the upper side. So we are currently entering a very strong price level. So if you observe a lower time frame, let's say the 1 hour time frame, you'll notice how gold has been activated. So clearly, there's a pattern here. I think this is a triangular pattern somewhere around here. And then a breakout towards the upper side. So for breakout traders, this was very nice. So since then, this is the prevailing pattern. So it seems like the market is just following a pattern somewhere around here. And from the lower side, I think it's something along this path here. So since the breakout, this has been the prevailing movement. So upwards, downwards, up, down, and it keeps going down. So at some point along the two blue lines, we'll be observing on the forward chart whether, let's say, we get to a resistance level and gold happens to change the price. So from the 1 hour chart, it seems like short-term movements in between the two trend lines. So if you are a frequent trader, you are taking advantage of smaller movements in smaller time frames, then the 15 minutes chart might be something that is interesting to do because the market seems to be oscillating between the two trend lines around the 15 minutes chart. And if something happens around this area, then you're able to capitalize on such an opportunity. So the most recent swing is here, market gets here, rejects the lower trend line, and then immediately after rejection, rallies all the way up to the upper trend line. So if you are trading within a 15 minutes chart, then this could be an idea for you, especially now that the market seems to be headed towards the lower trend line, then you observe the price along the lower trend line. So a very interesting play in gold on a much lower time frame, that's the 15 minutes chart. So AUD-USD, as already mentioned, we have seen the market drop all the way down. So make this clearer. So happened to go back up, seems more or less like a test of this area here. And if there's a rejection, then we'll see a continuation of the original trend, the one we have been observing since morning. So the US 500, that is the S&P 500. So this has been the prevailing trend. So the market has been following this particular path here. So it more or less what looks like a rising wedge before breaking towards the upper side. Sorry for that. So you can see the swings towards the upper side, the lower side, the upper side pulls back down and then breaks all the way up. And if you use a much smaller time frame, you'll notice that now, instead of following these prior trend lines on a larger time frame, if you narrow down to a much smaller time frame, then this is what it seems to look like. An area acting as a very strong resistance level. And now, if you are on a lower time frame, that is the 1 hour chart, then this seems to be the path. So for technically, since the 13th of June, that is last month, part one, the market basically was bullish the entire month, that is July, kept going up, hit this high here, And now, since the new month, that is August, we are talking about the last 2 days, yesterday and today, sorry. So price went up from this high and now seems to be pushing further down, meaning that the equities are taking a breather, maybe towards the lower side. So the last time they had a breather, we saw this, which took a couple of days. I think maybe somewhere along 3, 4, this is 5 days. So for 5 straight days, the market was just moving sideways until it got to the lower trend line and then accelerated all the way up for 3 straight days. So now that the market seems to be pushing further down, so it's a very interesting play. You can see the market form a pattern within a pattern. So if this happens to play out, then it's an issue of observing the price around these levels and seeing whether it gets to the lower trend line. So once you observe, let's say, getting to the lower trend line, then maybe there will be an opportunity to trade in the opposite direction. So just observing this price level around here. So if the price keeps oscillating around the rectangle here and gets to the lower trend line, then it's an opportunity to start looking for a buy position or even a breakout to the lower side. So remember, as the markets continue being bullish, these may be short-lived. It's not complete fundamentals supporting a bullish market. It's only a breather that is taking a period of time as the market recovers from the recent falls. So at some point, we expect the market to continue pushing further down. So remember, in a bear market, you tend to see more downside than upside. So the most recent rally or the movement was the upper side, may be representing an opportunity to go for short positions. And this is not just in equities, it's also in some currency pairs and also in some commodities. So as for USD CAD 1 hour chart, this is what we are having, a very interesting pattern here. The US dollar is generally losing to the Canadian dollar, and this is on quite a weak trend. It's not very strong, but then it has rallied since yesterday towards the upper trend line on the 1 hour chart, and is now forming a very interesting pattern that looks like a very strong entry by sellers. So in this case, you might be looking for position, let's say towards the lower side, and this is a subject to confirmation on how the current candlestick closes. So if the current candlestick closes closer to the low here, then this will be confirmation that we are going down and an idea to go for a short selling position. So for those who are new, if you are, let's say, trading on a demo account, the idea is to go for a short selling position, set your stop loss just above the pattern, and take profit all the way down towards the lower trend line. You can always compress your chart and then extrapolate to see where the market might hit the lower trend line next. So maybe setting a stop loss just above the pattern, short position, target all the way down, and then see how this plays out. However, if the dollar happens to be very strong, you have to be aware that the market could potentially break this level and start a completely new trend towards the upper side, especially with the volatility we've been observing in the market. So aside from US denominated assets, we have Euro New Zealand, which is also forming a very strong and interesting pattern here, where we have seen quite a series of patterns where the market has hit this trend line, found resistance and gone down. Then it happened earlier on the 1 hour chart that the market was unable to break this level, kept going down, and could see some further downside towards the lower trend line. So a very interesting pattern that has been happening over time. And if you're able to capture these, then it's easy to capitalize on it. So any questions? So awesome. As for Cosmos, the sound and the video is nice. Thank you. Welcome, Samson, Dennis. There's a question, which pair is this? Sorry, I'm not able to reference to that. There's no timestamp on your message, so I'm not able to know exactly which pair I was focusing on. My MT5 will open but wouldn't show any activity. What do I do? This is a very good question, Stanley. So I'll try to show you how to work these out. So I'm basically building a series for trading. So if you're very new to trading, I'm doing a series from novice to pro. That is a series of 10 episodes where I take you from what is Forex. I am a beginner, I don't know how this works. I take you from that very step to a level where you are able to trade professionally. So in this series, I've only done 2 episodes so far. The first one is Introduction to Forex, and the other one is Charting Skills. So if you can go to the FX Pesa channel and then you click on the menu items, that is on the different playlists, you are going to find the playlist from Novice to Pro, and that will help you with your question about MT5. So I hope that answers your question, Stanley, and will help you going forward. So what indicators are you using? I'm not using any indicators in this presentation, and mainly it's just to avoid making a recommendation of any indicator. So I know there's a lot of indicators available, technical indicators that you can use in your trading. Most of them are good, others are not very good. But if you want to use some indicators in your trading, make sure that you study that indicator, understand how it works before you use it, let's say, to generate your signal. So in today's presentation and in this series, I'm avoiding using any technical indicators. So I'm only following the price action, looking at the major support and resistance levels to try and identify key price points. These could be entry levels, exit points, or even decision points in the market. So thank you for your question, Dennis. So there's a request to check on gold. I know I've already checked on gold, so it's probably someone who is late. So gold is forming a very interesting pattern on the 15-minute chart, where we have seen very strong bullish momentum happening over the last 4 days. So you can see the acceleration towards the upper side, towards the lower side, up, down, up, down, up, down. And now the most recent swing is moving from the upper trend line towards the lower trend line. So if the market gets to the lower trend line, it's an issue of looking for a trading opportunity. And maybe it's just an idea of looking for something like this. Candlestick that stretches to the trend line shows a strong rejection of lower prices. And then this would be the idea to now start going the opposite direction. So sometimes when the markets are changing direction, it's quite a common scenario or observation that there will be candlesticks with tails extending to the resistance of the support level. So we have seen it happen there, happened here. Since then, it did not go lower than that, kept going up. Sometimes here, it's a smaller tail in this case. So these weeks are very important. And perhaps in the next 1 or 2 weeks, we'll be doing an entire series just focusing on candlesticks, what they mean and how you use them to trade. So make sure that you follow the FX Pesa channel, and we'll be doing more and more content, that is beginner content, as well as live analysis content to help you grab these concepts. So yes, for Audi USD, it's a retest. For gold, 50 minutes chart, it seems like a swing towards the lower side. On the 4-hour chart, the areas to watch is the 1800 price levels would be a major resistance level. Also the 1785 price level, which was hit earlier in the day. This is 1785, the red line here. It's a price level that was acting as support here. So it was the lowest price in May earlier this year. So if it happens to be the major resistance in this market, then it could be a trigger to start looking for major trades in the opposite direction. So a very interesting area to watch. Notice we have already hit 1785. The current candlestick has not closed yet. If it closes much lower than the price level, then maybe it could be our signal to start looking for short selling positions. So far, not yet, not very convincing. But at the top of the hour, if the close is way lower than the open of the previous candlestick, then that would be a bearish engulfing pattern indicating a rejection of higher prices, maybe a confidence booster to go for a short selling position. So that's the analysis for gold for today. So as for oil, I mentioned that this could be a very interesting bottom. We are already seeing long tails towards the lower side, indicating rejection of lower prices. So this could be the bottom for this week and an acceleration towards the upper side. So the idea is that the market is trading between the 2 trend lines here. So it's more or less of a sideways momentum. These are the swings. So it's more or less like a sideways kind of a triangle, not yet a rectangle. And now we are just bouncing from the raw trend line. So we could be seeing the market accelerate towards the upper trend line, or even perhaps breaking and accelerating even higher. So those are some of the ideas we've related in our analysis today as we approach the end of the presentation. So any other question? Awesome. So if there's no other question, then I'll check on one more asset. So Dow Jones, that's the US data, and the US tech, that's the Nasdaq 100. So US tech 100, this is the 4-hour chart for the Nasdaq 100. So notice the sharp swing that happened here, where the market was extremely bearish and then changed direction, started going up. And now we may have hit an important price level that may be serving as a major resistance. So from the top of the pattern, that is the beginning of the year, somewhere around the 1st of January, this has been the pattern. So if I was to draw a major trend line here, then it seems like the current acceleration is very close to the upper trend line, indicating that maybe this could be the end of the rally. So from the lower side, this has been the general direction of price, the Nasdaq 100. So the bear market started here at the beginning of the year in January. Market kept going down and then up and then down and then up, all the way down, up, down, and then up. So the most recent swing is basically taking this pattern. So something similar with what's happening with the S&P 500. So these are the swings here. So it seems like the market has broken towards the upper side and it's keeping on going up. So now we are facing a major resistance here. This is the high that we saw back in May. If the market completely fails to break that high, then we might be going back down. So some of these equities have already hit a major resistance level and might be headed back lower. So this is a very interesting area right now, especially since it's the beginning of the day. Remember, today is Tuesday. So we saw yesterday the market attempt to go up, failed to go back down. Today attempt to go down and then failed back up. So somewhere around these price levels may be major decision points. We also look at the 13,000 price level. It's a major round number. So we are here as the major resistance here. So at some point, you could be seeing the price start to accelerate back downwards. So for the US 30, we might be seeing a much stronger US 30 compared to the other indices, that is the Nasdaq and the S&P 500. So for this one, it's also behaving in a similar manner. May have already accelerated and hit a major resistance level. So you just have to observe the performance since the beginning of the year. So this is it, the major high, the other high is right here. So still some room here. On the lower side, seems to have been quite consistent with the bear market. So now, if you look at the most recent swing and zoom a little bit further, sorry for that. We have seen there's a major price level here. This is a low that we last saw on February. And then we see the high that we saw here. This was in May. Then it's clear that the market is accelerating, broke that level and could be headed higher. So if you look at the swings on the lower side, the support is quite clear. Sorry. So the Dow Jones, the support is way far from the current price level. As for the resistance, seems like this is now our prevailing trend. So if the market happens to have hit a resistance level, and if it has changed direction, then we still have some very strong room for movement. So major resistance levels have been hit in most of these indices. And if this happens to play out at the resistance, then it could be a real nice opportunity to go for a very good risk reward kind of position in most of these markets. That is the US Tech 100 or the Nasdaq. So from the forward chart, seems like an overextended level towards the upper side. The Dow Jones forward chart same, and also the US 500. So if I zoom out, seems like also an overextended level, and we could be seeing the market go back down from that level. So this marks the end of my presentation today. If there's no other question, then I would like to end at this point, and I hope to see you guys on the next session. So, good question. Does the US 30 move the same as the US 500? Yes, there is a very strong correlation, but you should be aware that these correlations are not permanent. So there are moments when there is a very strong correlation between the three of them, depending on what is influencing the market. So for instance, when the US keeps on hiking interest rates, which is having a negative effect on the equities, as the equities are getting weaker and weaker, then they tend to behave in a similar manner. So right now, we are seeing a very strong positive correlation between the US Tech 100, the Nasdaq, and also the Dow Jones. However, if we get into a very strong, let's say, recession environment, then we might be seeing the Dow Jones performing better than the S&P 500 and also the Nasdaq 100. So the correlations are not permanent. They might change over time, but for now, it seems like a very strong positive correlation between the three of them. So hot currency with the news affect today, that's the US dollar. So the job openings at 5 p.m. will be affecting the US dollar. So a lot of volatility is expected there. Also remember, this Friday, we have the US jobs data. It's the NFP week. So from Friday, we will be seeing a lot of volatility in the Canadian pairs as well as with the US pairs. So thank you very much, guys. I hope to see you guys on the next week.